Welcome to 100 Trades in Review, part 16. We're back. It's been a minute since we've done one of these, but we're back grinding out this series to review trades from other traders and for me to give my opinion on what they could have done better or what they did great or whatever I see on their trades. Now, this trade comes from a member of our community called Metis47, and Metis has given me a little explanation of what he had thought on this trade. So we're going to jump over to that right now and take a look and see what Metis was seeing on his trade. Now, he says in his message, I saw that the level was hit. It was a daily level and then continued to ladder down. So I thought the target would be at least the daily hold level down. So he's talking about something maybe up here as a hold level. We'll take a look at this, of course, as we play the video. And then he says, so then I wanted to short on some lower time frames. I entered a short on a +1, -1 entry. So then he would be talking about a 4-hour level. Then I set my stop loss break even, but it was to less of a breathing space, so I got stopped out and then it continued to go down. Okay, just from that statement right there, I can see a flaw already in what we would expect. So a daily target gets hit on the top, that's fine. We identify the master, and we're going to use a few terms in here that are a bit advanced and I don't cover them in my YouTube courses. Rather, they're in the skill tree on chart raiders, but that's okay. We'll use them anyways, and then people can go back and review this. But typically when you hit your highest time frame target, it's what's called the master target. Now, the master target is not going to instantly target a 4-hour if it's the beginning of a range or the start of a Pandora's box. When you target something like that, the master time frame can't +1, -1. You can only +1, -1 off of what we call a controller. So if you're having the beginning of a range or the range is just being set, this would be the difference between using a master versus a controller. And again, if you want to learn about masters and controllers, you can go into chartraiders.com and learn about it there, or when we release our application, I suppose, since it's temporarily down. So let's just hit play. Let's frequently pause this video and give our opinion on what we think is happening here. Okay, so he's identifying his targets here. That's fine. Oh, it looks like he's going to write some text on the screen here. Put up a trade. Put a trade on the books at this 3-minute level. Okay, so let's see what he's doing here. So he's got a daily level he's identified somewhere. Remember, he said that. He's on his daily right now, so he's got his trend work. That's fine. I don't mind that. That's a correct trend. He's got his next set of trends. I wouldn't be using daily trends here to get like a 3-minute short or a 4-hour or anything like that. Looks like he's got a 4-hour trend. It would be a range trend. So we can always just mark trends like this, and that's fine. There you can have 100 trends on your charts. The problem is like the trend that they have to have intention. Just because we have a level on the charts doesn't mean it's valuable trading data. And what I mean by that is he's not wrong for marking this trend. It's just I would always ask the question, what kind of data are you getting off this? Like, are you trading that 4-hour level when we're marking it, or is it just there for information's sake? Because if it's just there for information's sake, we probably shouldn't have it. We always have to have the decision between using the data that leads us to trades that are worth taking versus just data on our screen just to have it. So that's just the first comment I will make here, because I'm seeing a daily trend here. And my worry would be like, as you can follow my mouse here, we come down, we break this daily level. Your 4-hour levels would be like in here, you might have one here, you might have some up here. So like if you break this daily level, this trend, it's relevant, but it would be one of many 4-hour levels that are inside of the range that would break this. So breaking this daily trend would represent attacking the range that it represents, which is, okay, so we're at 54 seconds. So it would represent attacking this range, which would be more in here. So like if you have this range here, you have moved this trend over, this is the end of the range that would be protecting this. So if you break this trend, you're going to be more exposing this part of the chart. So you break this trend, it exposes this part of the range. So then if you have a 4-hour level down here, you'd be breaking the daily to target something that the 4-hour level breaks. Well, your greedy 4-hour levels are going to be in here. So you're not wrong in stating that you would have a daily trend here that breaks and it would target a 4-hour level, but then that 4-hour level would be like one of 6 or 7 levels. It would be the same thing as if you wanted to take a 1-minute hold level or a 15-minute hold level, and there was 6 of them and they kept going deeper and deeper and deeper, and you just say, well, let's just take the first one. Well, you're probably going to get smoked on that trade, right? So let's just continue, get back to the 54-second mark here. So this trend, I don't see a value for it, especially again, see now here's the next thing. We're marking a daily trend, a daily level, that's fine. Daily hold level. I'm seeing the same problem being run into here. Like if you break this trend, then your daily hold level, like why would you use this when there's targets above, right? And that's because you're breaking a larger trend. Let's just see what happens here. I haven't watched this video, so I'm just kind of like giving my commentary as I see fit. And then if you're going to buy this daily hold level, like I feel like you need to go deeper than a daily target. Daily target. Okay. Okay, so you're going from daily to daily. That's your idea. So this daily has already been hit, but let's just see. Bias short. Okay. Okay, let's see what happens. Where he takes his trade and what happens here. Initially, I wouldn't look for a target that's daily, but let's just see. Okay, he's flying all over the place here. I think he's looking for this. So he has a 5-minute level here. So his 5-minute level's been hit, right? This would be the next trail to follow, would be right here. So this would be your next short, which obviously doesn't work. The 5-minute level's hit. So is he going for a 3-minute level inside of that 5, maybe? Like a combo level? 3-minute there. Okay, so he's using a 5-minute to a +1, -1 to a 3-minute. Okay, so this is going to work as long as you break the range trend here. So what's going to happen next is you have a 5-minute hit. That's fine. You want a +1, -1 to the 3-minute. You can't, you would need to go back to the 5-minute time frame to make sure you don't close above that number 1. So there should be a second level here. And I'm not sure where that 5-minute level lies. Maybe it's the wick of this here, but I do know it pierced past that 5-minute level because that's one of the first things I looked at, right? Like this 5-minute level is right here, for example. You've already pierced past it to get to that 3. So 5 trailing to another 5, trailing to another 5. It still has to represent this. So if you hit that 3, you need to dump pretty quickly in order to stay in this trade here. So that would be my thing. That would be my thing. If you're using the 3-minute level here, you need to like close under that 5 and then use that as a shield or trigger to the trade. So I'd really want to see him mark the 5-minute level here to make sure that we're closing underneath that and can at least create it as a reverse level for the future. Some type of shield, some type of trigger to say like, we've got a 5-minute level here. It needs to trail these 5-minute levels. Maybe he'll pick up on that. You got a 1-minute trend, but you have a 3-minute level. So a 1-minute trend is just going to represent, like, let's talk about this for a second. You have a 3-minute level, right? So if you have a 3-minute level, the 1-minute trend here is simply just going to represent that it's a 1-minute level breaking. And if you break this 1-minute level, all it's doing is exposing this part of the range, which is right here, which is actually already hit. So by breaking this 1-minute level, all you're doing is breaking your final hold level, right? Or going to a break level inside that range. So there's not a lot to get off this 1-minute trend. You can have it, and if it breaks the trend, you can get out of the trade. But I would rather see using that 5-minute hold level to create the trail instead of using the 1-minute trend. But I think by the time you lose a 1-minute trend, you're just sacrificing every profit in the trade, right? And so he has a 1-minute hourly level that he's trying to get under here. Oh, he's got the pop-ups. My camera's hiding it, but he's got free version trading view. I really hope he goes to the 5-minute level here. Again, I would use this trend less because once that trend breaks, it's going to crush. I would use the 5-minute ladder, like the 5-minute trail to create the safety on this trade, not the 1-minute. Let's just see what happens. Maybe, you know, we'll see. We'll see. That's just personally how I would do this trade. Because you need the 5-minute, hit the next 5-minute to give you the next 5-minute to give you the next 5-minute. And eventually, if you do that enough times, over 5-minute, a 5-minute, a 5-minute, a 5-minute, you're going to create a 15-minute level. And then the same thing's going to happen. You do it a few times on a 15, you're going to create an hourly. But this is how we create trails into higher time frames. Looking to gain the 1-minute so I can put my stop. Okay, so this is a place where you wouldn't put a stop. You would just get out of the trade. Like you always have a stop, of course, but you're more making that decision on the 5-minute level. Like I really hope at some point he marks this 5-minute level. Moments before disaster. Really want to see this 5-minute level. I really want to see what it looks like on the 5-minute chart here. Stop goes the high of this small range. Okay. So his stop loss is somewhere up here. I'm assuming that's what he means. Yeah, kind of exactly. Like, yeah, his stop loss is like right, like just above that, right? Like something like this. But like we can see that with a 5-minute level. Like you're asking a range to hold when the trail can't hold. Come on, swap to the 5-minute level. I'm assuming it's something like this candle right here, maybe this backside right here. So I don't mind this. So this trend here tells you that once this trend breaks, it opens up the base of the range, right? So then you'd be back here on like the backside hold level here. And if one of these two parts of the move, okay, let me turn my camera. Let me move my camera here for this actually to the right. So like when this trend breaks, what you're doing is you're saying this backside hold level here, which would be localized polarity, which is already tested here, or this hold level. Like if you come down like this and just follow my mouse here, you come down like this, you lose this trend, it opens these levels up. These levels either hold and the range is still working and you're going to now make your range trend on a higher time frame, or it can't hold the move and it's actually just going to sink to the next range. So when you break this trend, if this backside here or this 1 minute hold level, whatever this range is protecting, whatever this trend is protecting, it's protecting the base of that range. So you break this trend, it protects these. So these open when that trend breaks. So that means that when you break this trend, you can go back and attack these two levels. Well, one of these two. They're basically the same price. That's why I'm just like connecting them, because you got a hold level here, you got a backside here. Like one of them is going to be hit within $1 or $2 of each other. That's fine. Whichever one is hit, it doesn't matter. And the question now becomes, these either hold and the move goes up because you're now adjusting your trend to a higher time frame, or they cannot hold and you just move and lose the range. Like it's very straightforward, right? Let's hit play here. We only got a minute left to see what happens. I really just want to see him go to the 5 minute level, because he justified this whole trade at 62.432 off a 5 minute, and there's a 5 minute trail there. I need to see what's happening on the 5 minute. We got a minute left. Hopefully he goes there. 48 seconds. Starting to crawl up. And again, this is where I need to see the 5 minute. Oh, 3 minutes. Oh, he almost clicked the 5. 5. There we go. Good. Pause. Okay, so this is it right here. This is the marquee of the trade. This right here. If you can't get below this 5 minute, you've already, this is the most important information on this trade. Let me move my camera back over to the side here. Okay. If you've got this 5 minute level right here, you've justified the 5 minute buy, it needs to build its next 5 minute level. If you cannot get under this level clearly, where this had tried to, the second you start closing above that, you need to get out of this trade. So like you kind of have like this indecision candle here. I would just call it like, the decisions are being made. There's a 5 minute level here. It tries to close under it. It creates a hold level above it. So now you're basically in a polarized decision. You start getting above this, get out of the trade. You start getting below this, stay in the trade. So if you get below this, you stay in the trade. If you close below this, you stay in the trade, because you've created your next 5 minute trail for this. So 5 minute trail, 5 minute trail, right? Then you can see if this range tests. And that is really where the key of this trade lies, is understanding that you've got a 5 minute here. Your next 5 minute point has to also create. You can target lower timeframes inside the 5, such as the 1 or the 3, which was done on this trade, but understand that that 1 and 3 minute level must also verify that this 5 minute can create. So again, that is the key metric to this trade. I hope he stays on the 5 minute here, because this is really everything that we need to see in this trade. I hope he just lets it play out on the 5 minute, minus 97%. But I don't understand, how do we get minus 97% if he opens a short? Maybe I misunderstood where he took. I thought he took his trade up here, right? Takes his trade up here. So why would he lose 97%? So that's like a 1% loss, because he's probably trading on leverage. Wait, let's see. Open time, close time, 25. It's not saying our price, 50x leverage. So I'm assuming he basically left break even. I'm assuming he basically left this trade break even. So somewhere he enters and he basically leaves break even, and then it moves down. So then we can talk about the next further piece of this. So like the next thing that happens is it goes to test this here. See how it went and it tries to break the range. The next piece of this is it's got to test this right here, like this right here. And you can see it testing right there to try to hold that move. And if it can't, it's going to lose its move and it's going to lose the range and get right to the bottom of the move, right? And then so he's making mad faces because he saw that. So his key metric here was that 5 minute level, If it never closes above and below you, we need to see what happens with that 5 minute level before we make any of these decisions. So if we just go back to this 5 minute again, real quick, that would have been somewhere closer to the last minute, like in here somewhere. He goes to the 5 minute, 5 minute. So this is the key metric. Like he hasn't closed above this hold level right here or below this. So we really needed to wait to see what was happening here. We needed to give it this extra 3 minutes to see, are we closing above this and creating a hold level to move up, or are we closing below this to keep moving down? So he needed to wait 3 minutes and 40 seconds more in this trade to make sure that he was able to properly assess whether this is moving up or down. And then he ends a trade with no loss. He protected his account. So good on you for risk assessment. You didn't really lose that much. And then it moves down shortly after. So I think the meat and potatoes fundamentals of this trade is that whatever time frame you ladder, also continue that laddering process to see what targets. Like if you want to buy a 5-minute level, go target the next 5-minute level. If you, or make sure you gain the next 5-minute level as rejection is target. If you have a 15-minute level that you're doing this, then you can buy re-entry on the 5-minute level, but make sure that you close under the next 15. And if you can't close under that next 15, that is when you need to exit that trade. And that is it for this trades in review. If you have a trade in review that you want to submit to me for a review, join our Discord, links in the description, and send it to me with a description, a video, etc., etc. Thank you very much. See you on the next one.